Hello, folks. Brandon with you today. Brandon Chapman with you. It's January 31st, 2022. We're about to kick off a very ugly, if you look back, just looking back from a bigger picture perspective, one of the worst performing Januaries we've seen. And is this the sign of things to come? I mean, you start to back this out from a bigger picture, things can look a bit ugly. I mean, you see how large this candle is relative to the past. It just kind of sets the tone, and it makes you wonder. Thus, the topic of today's session: how much is left? I mean, is this a blow off that we're seeing over the last couple of days? If we kind of zero in, a big breakout, or is this a breakout that's going to lead to further upside? We're going to look at the volatility indices to give us a read on that. Plus, a look at WallStreeBets and some of the mentions there, EVs, cannabis, and crypto. Also, there's unusual option activity aligning with those bullishly. A little bit of travel going on. Utilities leading the way today as far as from a sector level. So lots to talk about. Not enough time to do it, so we'll do the best we can. Anyway, let's get rolling. So we look at our sector performance. You'll see that cyclicals led out. We had technology in there. Utilities were right there in the mix as well. Very unusual that we'd see utilities doing so well on such a bullish day, but it's just reflective of maybe the uncertainty about the near future here. And the fact, if we look at treasury yields right now, the 10-year flat in the session, yields aren't rising. Maybe there's some low-hanging fruit in utilities bursting higher back towards prior highs if we see what? Continued strength in the market. And again, I'm going to provide that caveat because, man, utilities at this level, and especially at 71, 72 are a bit overbought here. So they're very overvalued relative to historical trends. So none of this stuff really looks amazing in terms of valuation. Energy is decent compared to historical norms. Maybe we're starting to reach a little high today, although there was some bullish activity in Exxon after some restructuring. They do have earnings coming up this week as well. But let's circle back to the S&P 500. Okay. Big move today, up nearly 2%. We had a little kind of congestion here, a little, thought it might be a flag pattern. We might continue to the downside, but no, we're breaking out to the upside. And last Monday, I spent some time talking about some of the capitulation that we saw in the market in terms of advanced decline, et cetera, the 90% day coupled with some of the volatility indicators. There was very strong signals, particularly in the morning of last Monday, the 24th, that were very significant from a bullish perspective, where you expect to see a short-term bounce. Now, that short-term bounce, how much does it have in it? Could it go back to the prior high up here? Or might we just stall out at a 45.50? So one of the things to look at is what the VIX market or the volatility markets tell you. So number one, does the VIX have some downside potential here? Absolutely. Right? I mean, the VIX probably to get back to norms would be kind of around the 20 area. We might slip to 18. There's still room for this to decline, although this can happen rapidly. We want to see, if you're looking for the market to top out, we're wanting to see the VIX get slammed here, meaning that you want to see sellers come in. And part and parcel with that, you also want to see the term structure steepen. What that means is you want to see 3-month VIX rise relative to 1-month VIX. Now, we did see that today. This yellow line was rising, but the reality is we're not near the 1.2 threshold. See this over here? So you want to see that basically the 3-month VIX is 20% higher than the VIX. Now, does it have to get there to be bearish? No. We could turn any time, right? I mean, we have the backdrop right now, the Fed that is aggressively tightening or expected to tighten. There's a lot of uncertainty right now. Sometimes you get to the 1.1 level and start to work over. But the reality is we're coming off a pretty low level like we saw early December, late November. There is a chance for this progression higher here. Now, what does that mean for the market? With the Fed, clearly not yet tightening policy, they're still buying. I mean, there is room for the market to possibly eke higher here. And eke higher, we might start quickly and then start to erode. But could we get to 4,600, maybe 4,700 back here? That's a very real possibility, okay? May not be likely, but again, looking at the volatility, it certainly seems like there's room for the volatility to fall, for the term structure to steepen. However, we have to realize skew at 133, 132 yet as of last Friday it's still very, very high. The risk is to the downside. If this had reset back down here to 115 to 120, and we saw what we got from the 3M to VIX ratio, now we're talking in terms of a potential for a major reversal. But right now, we're looking for is a little bit of an oversold, maybe a bit of short covering. And of course, if you guys been listening to Don, he's been on the arc here from a bullish standpoint, looking for this little bit of a squeeze here. And this does dovetail with some of the areas we're seeing in terms of WallStreeBets trends. And so again, you kind of put this in perspective. There is room right now for a bit of a bullish move. The only question is how high. But watch those indicators. Skew, watch for skew to increase as the VIX falls. Watch for the 3M to VIX ratio push towards 1.2. Now we're looking at the possibility of that correction rematerializing. Okay? All right. Now, as we look at some of the stocks that are performing well today, Netflix is right there. Of course, Bill Ackman last week announced, hey, I took a stake in it. Took some profits from this, put in that. Didn't necessarily move the market a lot on Thursday, held on Friday, breaking out today. There was some decent trade in it, all for the 4 Feb expiration, so very front-loaded. A lot of the stuff you're seeing today in terms of big option activity is for this week. Although we are early, this stuff can get faded. So again, but we are breaking through the gap high. Maybe look for this thing to could we close the gap? Sure. We got resistance around 480. Again, there's possibly for some movement here or continuation. We did finish on the high of the session today. And so again, this would be a reason to consider getting at the close, or we open up similarly tomorrow, looking for a little bit of short-term movement to the upside, maybe just for an intraday trade. So watch that on the open tomorrow. See how we strengthen just off the first few minutes, and you might consider going in the direction it breaks out. Let's circle back to Wall Street's bets here. So again, it's kind of funny. I mean, it's kind of interesting. You can get data in terms of mentions on WallStreeBets to see what's the crowd looking at. We're talking about crowd. We're talking about retail crowd. What are they watching? The top mention by a long ways is actually EVs, right? Electric vehicles. Crypto was a ways number 2nd, and then shortly behind that was cannabis. We're going to look at 2 stocks today on the EV side. Again, is it purely electric vehicle, or is, again, these are alternative, well, at least these are energy sources like fuel cell, for example. FCEL. So fuel cell energy. These aren't the best like fundamental type stocks, but they are very oversold. And again, sometimes you get a bit of a short covering rally. And again, the bearishness has kind of played out. We've had the earnings already in late December. We still got some room before we have the next earnings. You notice we hit a low here. We tested again, and today we're bouncing off of it. And we're also breaking through the high of January 26th. And so you start to look back and say, well, how much can we make back here? I mean, can we go to $5? Absolutely. $5 is a decent size move from our current level at 424. We can also look at the options market and say, what are they expecting? Was there any significant activity today? Well, if we look at the option time statistics here, you'll see what? 2.66 times the average. So the calls were surging today, 58% at the ask. So again, you're seeing a lot of call buyers coming in fuel cell. All right. And you say, okay, well, what are they buying? Any large trades in here? You're not really seeing anything really stand out. You got an 18 Feb 22 $5 call option. They got traded at the ask there. But what's interesting, and again, this is kind of broken up in here. I mean, some of it looks like, it got filled at the bid. But in reality, I mean, you start to dig deeper. Most of it actually filled at the ask. This is the $4 strike price right here. Now, you'll notice more activity at the $4.50 and even at the $5 strike price, which we saw down here. Again, 2 different prints for 500 contracts filled an hour apart. So there's been a lot of buying activity in these weekly expirations with a strike as high as $5, which happens to be the 61% retracement level. So you might readily look at fuel cell going to $5, maybe even higher here. Another one is plug. And I realize this is, again, it's a fuel cell kind of company here, up 16% today. Now, again, this did have prior support going back to May that we kind of tested here. We came back on Friday, held. We're breaking out today with volume. So this is a significant day in terms of the near-term potential. The 61% retracements at 23, but man, this is a big move. We might readily have a chance to go back and retest the prior high at 26.25. Now for plug, Again, it was a 4 Feb. It was the 21 strike. And you'll see right here. So this is kind of moved in the money. There's been some other activity kind of pick up out here at the 22, even out here as far as 24. But again, I think it's a strong kind of indication. This could be a bullish week for electric vehicles or alternative energy, alternative power for vehicles like plug and fuel cell. Again, maybe some near-term upside to 26 for plug. So I thought that was interesting and dovetailed with some of the mentions that we were seeing on WallStreeBets. The other one's crypto. Now, if we look at Bitcoin, I mean, Bitcoin wasn't exactly screaming today, up about 1.5%. If you look at gold was up about 0.5%. There's some bullish activity today in AUY, Yamana Gold. There's been a couple of bullish trades in the last week here. But if we think about, Bitcoin, I mean, there's not as pure of a play. And there are producers, I guess you could say, like a Mara. Now Mara, the cash flow situation is not great, right? I'm like, they can't do it and generate positive operating cash flow. But near term, could we see a little bit of a bounce here if Bitcoin finds its legs and maybe a bit oversold? It's testing a pretty significant level of support down there. Volume today was about average. But the trade in Mara was a 4 Feb again at the 24.50. It's kind of a little obscure in here, not massive here, but against the open interest, you can kind of see that difference in there, as well as the 23.5. But again, the 24 is what I'm looking at. So again, 24.50. It makes it interesting, right? What's the near-term opportunity? Or 24.50 isn't very far away. That's all you're expecting. But it is an indication of some near-term bullish activity coming in, expecting the stock to rise in the near term. And again, you measure the last pullback here. I mean, could we see a run to about 27.5? Would seem very reasonable. It could happen this week. And again, so a lot of these are weekly options. So we're talking short-dated stuff, slightly out of the money, but indication we're expecting to push. Finally, cannabis. So when you look at stocks like Tilray, for example, huge activity today in Tilray, and it was a little bit obscure. I didn't really write this one down, but this $4 strike in here. So this was filled in two large prints. You look at the time and sales. It looks like one was bought and one was sold. They got filled at the same time, but my guess is these are short puts being sold at the $4 strike price. And then later on the day, you saw it for CGC. So for example, CGC, it was the 18 Feb, the 750 strike. Now it's moved in the money here a little bit. But again, that's more significant in the open interest. This says is opening activity. You look at CGC as an example. I mean, a nice big breakout today. Again, the 750 is in the money a little bit. But again, can we get back to the prior highs of 950, 960? I think it's pretty reasonable. And I do have an earnings coming up here. Is this an indication the earnings are going to come out positive? Man, I don't know. But this is for an 18 Feb, and the earnings coming up are on a 9. So it's covering that earnings. So this has been an interesting set of stocks because the earnings look like we had a really good sign back here in August, and boy, it fizzled in November. We'll have to see if things do come around. The price is significantly lower, and again, some bullish interest coming in just before earnings next week. Finally, we're going to take a look at travel. Now, travel stocks like NCLH as an example. Norwegian Cruise Lines, again, testing support. We talked about it last Monday as stocks that were showing some bullish activity and travel anyway. We saw it. We looked at DAL, for example, last Monday. They got a nice little move, then pulled back, but then today we're bouncing. So cruise lines and airlines were showing some strength. In terms of option activity was in Norwegian Cruise Lines. For Norwegian, it was the Feb 22-24. So we look here, the Feb 22 and 24 was an upside call vertical. Look at this came in a little bit later. I didn't have a chance to look at that one, but an upside call vertical here at the 22-24 strike. Again, giving you an expectation moving towards 24. Again, that's been pretty consistent with other activity we've seen over the last week. So near-term bullish upside to 24 in Norwegian Cruise Lines. CCL as well. Again, forming kind of a higher low versus here, a lower low versus here. But so weakening trend, but we have kind of firmed up around this $18 level, $18.25. And in CCL, it was the 4 Feb. So we're talking a weekly expiration at the $21 strike price. Sorry, 1950. 1950 for 15,000 contracts, 7 So again, some building out there, but not as much. But again, you'll see all this is almost all opening activity. Again, the 1950 strike, which is basically at the money for where we are. But again, an expectation near term we could run to 22 to maybe $23. So again, as a swing trade, these are some trades. These are some setups that are forming right now. Jets, airline ETF as an example. For Jets, it was the May expiration. And this is actually adding to stuff that I've noted for our members for like the last little over a week here. But so this is just adding to it. It's out on a May expiration. And you notice this is less than the open interest. But again, remember, if you've tracked prior activity, you can add to it, right? And then you know this is opening, and this was buying the 2486, selling the 2786 today. So again, adding to that activity where there's previously buying the 24 and selling the 27. Again, $27, $28 upside by May. Is that possibility? Again, you think about Omicron, if this is truly, if we're going to start to see things open up, Denmark, the UK, maybe this trend continues and travel starts to really move. Asia opens up, so there's more travel there. We could see airlines do a lot better. Maybe we do see a 27.8, 28 handle by May. But anyway, again, it's interesting that we're seeing more movement back into travel, and we're getting a nice bounce off support today in that space as well. Well, folks, that's where we got to wrap it up. But again, it's been a pleasure being with you. We'll see you back next Monday for my video. Anyway, thank you. Have a good